Primed Strategy Series Episode 2. Another weekend's gone. Wow. Can't believe it's already 7 days since I recorded the last episode. Incredible. Now, that episode was longer than this one, but this one's going to be pretty interesting. I can guarantee you that. I know I'm going to be getting some good comments. Now, I read a lot of books. Those books give me education, but it is my direct experience in the market that actually helps me teach you guys specific knowledge. Now, the profit gap example came from a really good book called The Disciplined Trader, and I'm going to go over what it represents. Now, I'm going to be starting episode 2 of the Primed Strategy series with something we cannot control, and that is when we make a profit. Let me repeat that again so you get it. I'm going to be starting this episode with something we cannot control, and that is when we make a profit. You need, I'm going to say it again, you need and you must completely to understand and comprehend that in complete reality, absolutely for sure, we cannot control when we will make a profit. You get that? You need to understand that. You need to always remember that no matter how good a trade is, someone or something or some bank or some whatever can always come in and move the market the other way. That is why a trade is not a profitable trade unless it is closed in a profit. Hell, even if you have 500 pips on Euro USD and it's running, that's not a profitable trade. Close it in profit and I'll say bravo, you just made 500 pips. Let it run. It's still not a profit, so stop getting excited. Before I go into anything else, let me explain to you what you do, what I've done, what we all do here and there, and it has to stop. You open a trade and the NFP is coming out. I'll use the NFP because so many people traded it. And you go Euro USD buy. And what happens is there is a big spike. You have one lot and boom, it goes 40 pips in profit. Wow, you're 400 euros up. What happens? Your hands start sweating, your heart starts pounding, and you start going, yes, yes, yes. I've correctly predicted the NFP. And very quickly, well, somebody thinks that average hourly earnings are not as good as they should be, and it drops down, and now you're 400 euros in a loss, and you're down 40 pips, and we're counting 41, 45, 47, 55, 60. You're now 600 down. Excitement has no room in the financial markets. It has no room in your trading station, in your soul, in your heart, nowhere. When you come to the financial markets to trade, when you come to trade with me and my community, I want you to have cold blood, to be that bitch, to be that bastard, to be that rude motherfucker, that person who has no feelings for anyone and anything, but the only focus he and she has is to make consistent, weekly, compounded gains with a clear understanding that you will lose money here and there, and that's normal. So, before we jump into the session, I really need you to remember the main rule we have about trading and how each day and week should go. Since I'm recording this on a Sunday, but I really don't care when you're watching this because today or this week or this month can only end in one of 4 ways. You see it on the screen. A big profit, a small profit, break even, or a loss, small loss. There is no room for that fifth part, ever. And you'll hear me speak about this and comment about this every single day. And whenever you're watching this video, I don't care if it's a Monday, Tuesday, Wednesday, Thursday, Friday, weekend, Christmas, I don't care. Always remember that today, if it's a weekend, forget about it. But tomorrow can end only in one of 4 ways. If you're watching this on a Wednesday, remember that this week can only end in one of 4 ways. Remember that this month has to end in one of 2 ways. So your trading day and your trading week can only end in one of 4 ways. A big profit, a small profit, break even, or a small loss. But your month can only end in a big profit or a small loss. Yes, good pressure on you, but you're not here to waste your time. You're here to make money. Every single month, and I'd say even every week. Big profit, a small profit. But a day-to-day basis, a big profit, small profit, break even, small loss. Yeah, that's better. So on a day, it can only end in a big profit, a small profit, break even, a small loss, but your week, 1 or 2, and your month, 1 or 2. Agreed? Great. Now, let me remind you again. You must completely understand and comprehend that in absolute all reality, you cannot control which trade is going to make a profit. More on this soon. Let's talk about filling the gap with the right things. Now, the profit gap, what is this? The profit gap is basically the difference or the gap between the potential profit you could achieve if you had just followed your trading system and tactics and what your actual bottom line results are. So you maybe be losing money. That's that profit gap. You go from minus 10 to plus whatever that potential is. Now, traders often begin trading with a system with very high hopes. And that's normal. That's okay. But I'm here to give you a big kick in your butt and tell you right now that hope has no room at has no seat at the theater of trading success and has no seat in my trading community. Open up my trading community. Do you see anybody there called Hope? Well, unless that's their name, then they can stay. But your hope has no room here. I don't care. You got hope for the future, that's good. I don't care about that. Really don't care about that. All I care about is hardcore work, focus, and love for what you do. That's all I care about. Now, let me go over this again. Most traders start trading a trading system. Let's say my trading system. And they have lots of high hopes, and that's normal. But I'm giving you a kick in the butt right now, and I'm going to tell you that hope has no room in my community. Fuck you and your hope. Sorry for insulting you, but there is no hope here. I don't want you to hope that you're going to make money at the end of the month and pay your bills. I want you to do something about it. And what do I mean by that? Mindset, education, system knowledge, analysis, get it all in. Learn everything. Pretend that you're having a fucking exam. Okay? Because most of you spent much more effort on those exams to pass that school that hasn't taught you how to pay your taxes, hasn't taught you how to get a job, let alone keep a job. But it told you what the biology of a fucking frog is. Like, you need to know that. Okay? So, whatever seriousness you had when you were taking your exams for school and university and blah, 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 take it, add it to this, and times it by 10. That's how serious you need to be here. Anyway, most traders want to produce an income they can rely on and get consistent results from their trading, right? However, this is only possible if you're trading an effective trading system, backed by discipline and consistency, which unfortunately most people simply do not do. And as a result, they experience that profit gap we're speaking about. Now, the key point about the profit gap is that traders typically try to fill the gap by doing some silly things, like learning more about the market, changing their methods. Oh yeah, you guys do that a lot. Fly from one trading system to another because you don't give the trading system a chance to prove you if there's an edge. Because why? You're expecting to make a profit on the next trade. You shouldn't. Soon you'll understand why. They spend more time on their charts looking for trades. But what they really need to learn is more about themselves and how they interact with the markets. Essentially, you need to acquire the proper mental skills to trade this method as it should be traded. And then you can get the most out of it, which will result in you filling your profit gap. So we need to work on your mental skills. And you will in the onboarding with me, in the private sessions, in the group sessions. So to do that, we need to work on your mindset to fill that profit gap. That's what I mean. And we'll get to that pretty soon. For now, let me talk about doing the right things. And this is pretty important. What are the right things? Here's the right things. I'm going to start with the system review. Okay, number one. Whoop, where is it? Right here. You see this? Let's start here. Go to number 2, 3, 4. Let's go to 5, but you're looking at the wrong things. Come back to number 1. Focus on this first box and let's talk about that, okay? Thank you. So, what are the right things? For the first 30 to 90 days, I need from you hardcore work, I need from you hardcore focus, and I need for you to have a lot of love. And if you do that for the first 6 months with me, it's going to put you 5 years ahead in your life. No doubt, no joke. It's going to put you way ahead of everyone else. So, take a pen and a paper or screenshot this and cut them up and put them from 1, 2, 3, 4, 5. Okay? And then put 6, 7, 8, but you don't need that yet. System review. In the onboarding sessions, you learn about the system. Or throughout my screenshots and so forth. You learn about the system. I want you to write a basic short description of the trading system we use, the patterns we trade and so forth, just something small, like a Twitter post, and have that little review. And just check it. When you come to your trading station, before you turn on your computer and start going all FOMO on everyone, fear of missing out, um, check the system. Then check the rules. Remember, they're pretty simple. They're pretty simple, right? Don't stack positions, no overtrading, don't have FOMO, focus on the money. You know them. They're pretty simple. Check the rules out. Remember them. Don't rush through them. Connect with them. After those two reviews are done, do your position sizing. Know what your position sizing is. What's your conservative position look like? How big is your conservative position? On a 5K account, it's 0.25 lots. On a 5K account, the moderate position size is 0.5 lots. And an aggressive one is 1 lot. Okay? So know and prepare your position size. Once you're done with this, I need you to go ahead and start conditioning your mind. How do you condition your mind? What does that mean to you? Is it your goals? Is it what? I'm not going to talk about it right now, but create a little formula for yourself that helps you condition your mind for success today. Not yesterday, today, not tomorrow, today, just this beautiful day. One way to condition your mind is to understand and accept that today can end only in one of 4 ways. A big profit, a small profit, break even, a small loss. In fact, it is a rule that your day can end in only one of those 4 ways. So condition your mind right now that today or tomorrow, if you're watching this at nighttime or in the weekend, can only end in one of 4 ways. Write it down, put it on your desk or on your computer, and check it out before you trade. So once you do these 4 very quick things, which require 4 minutes, 3 minutes, you still have that other 27 or 26 minutes to do your complete analysis of investing just 30 minutes or even 20 minutes or even 15 minutes, depending on how much time you have. Once all of this is done, you move to the analysis factor. Now you guys know how the analysis works. It's those 3 pyramids, the past, the present, the near future. Let me explain them quick. The past, we map out the recent and, well, not recent, but over the last few months, the key support and resistance levels. If we are in the highest high and the highest or the lowest low, then you don't know. So we use the fib levels to try and figure that out a little bit. But we can't say for sure where the market's going to go. And don't try and predict that. Also, in the past, we also check where is momentum and what have been the trend phases. What I mean by this is where has been momentum taking us so far? What stage are we in? Is it a trend up, trend down, or a ranging market? Where are we? Once we finish that, we check the present. What is that? We check our tools, we check the candles on the 1 day, on the 4 hour, on the 1 hour. We check price action. We look for the patterns. We see what's going on. That shouldn't take too long. Finally, we come to the near future where we prepare the upcoming news that can affect any trading pair because, let's say, the US news can affect gold, can affect indices. Hell, it can affect indices across the ocean and affect the FTSE, the DAX, the yen, everything, right? So you prepare the news and you know when it's coming out. A really nice feature to do is to download the investing.com application, go to the calendar, click on the news that has 3 and 2 stars, and go on the little bell on the top right-hand side and check the notification thing, put it on all events, and put it for the last 30 minutes or 30 minutes before the event. So that's pretty much it. But past, present, near future is all backed by multiple time frame analysis, and that is checking the 4 hour, the 1 hour, the 10 minutes, the 1 day. You get the drift. But what do we do? What do? I sit and I check my 4 hour chart, I locate specific trades, and then do I start my multiple time frame analysis. I don't do it on every pair because it's going to take hours, and my trading system is not designed for that. So once we're done with the analysis, we have 2 options, and only 2 options. The first option is no trade. And if there is no trade to take, you see the red dot? You come back in 4 hours time when the new candle, or in 2 hours, whenever that new candle is coming out in the 4 hour, and you do the market analysis again, or when you have the free time. But what you do is you stand up and get away from your station. Go read a book, go do something with your husband, wife, children, your dog, your frog, your rabbit, squirrel, whatever you got, take it for a walk. Go to the gym, go for a walk, do something, and come back. But on that chance that if you find a trade and you execute it, there's only two ways it can end: win or loss. Okay? And if we break that down, how each day can end, it also comes down to how each trade can end. And that is a big profit, a small profit, break even, or a small loss. But generally it's binary, win or loss, right? Because break even is pretty much a loss. You wasted your time, and 4 is a small loss. But on the win side, it's either a small win or a big win. You get it, right? Anyway, let's move to the next slide. To fill your profit gap, you need to think right. And in this episode, I'll go over 3 key lessons. Lesson number 1, think in probabilities, not certainties. Again, think in probabilities, not certainties, my friend. When you learn to think in probabilities, you will not experience that mental trauma like those traders who haven't learned to think in probabilities because you are not expecting a winner on every trade taken. This is the primed traders community. Now, like those who do not think in probabilities, those guys who think that every trade's supposed to be a winner, those guys like I used to be, and I used to stack those positions so hard and I'd blow up such big profits. Oh damn, just thinking about that makes me want to stay the way I am and think in probabilities. Anyway, learning to think in probabilities releases your expectations from trades because you're focused on the result of the overall series of trades and not on the result of any given trade. You get it. You have the end of the week approach. You're focused on ending your week in a big profit, a small profit, break even. Well, who am I kidding here? We focus on ending the week with a big profit or a small profit by being selective and being smart. Let me explain to you. Think like this. If you have a weighted coin, and that means that it's weighted more on one side than the other, for example, heads, that means that it will come out heads 70% of the time. You still do not know the sequence of the heads and tails. All you know is over time, 70% of the flips will be heads. And if you choose to trade on heads, you're going to get it 70% of the time. But the other 30% that you lose, you don't know when they're going to come. So please apply this analogy to your trading. Next lesson. Your mind has to be free. To execute trades without making mental errors, you have to be free thinking that this trade, you have to be free of thinking that this trade will be a winner. Let me repeat that. To execute trades without making mental errors, you have to be free of thinking that this trade has to be a winner. Now, the typical trader expects this trade to be a winner, right? Or why would he even take it? That's you. You're doing this. You've done this before. But you can't think this way if you want to make money consistently and turn this business into a profitable venture for yourself. Now, once you start expecting each trade to win, you become emotionally attached to it. When you should know by now, my friend, it is not any one trade that matters, but the overall series of trades and your probability to remain disciplined over the series that matters. That's all that matters. Now, final lesson for today. It's not about being right or wrong. It's about the odds. A trade signal doesn't tell you if you will be right or wrong. It can't. It is simply a pattern that means the odds are in your favor. That's all it means. But you cannot start thinking that you will be right on a whole host of problems or losses will occur. Thinking about being right or wrong will eliminate the potential for the market to disappoint you. When you have a losing trade, all it means is that you're one step or one trade closer to a winning setup. So accept losses with open hands. Take them while they're small or break even. Okay? Tutto finito. End of episode 2. Got questions? Contact me directly or leave a comment below. Bye-bye.